Welcome to this Ronel Talks Money Show. Now, today we are going to discuss global real estate investments. And we have Hennie beside with us, who will be talking to us about this very exciting topic. And I'm sure a lot of you are interested in this topic and would love to learn more. Now, I'm just going to share with you a short bit of Hennie's CV. He's got a very impressive CV, so go Google him and read up on all his achievements. But Hennie is the Chief Executive Officer and Director of the Benchmark Group with more than 22 years of experience in real estate. In 1993, Hennie invested in his first healthcare facility and took over its management. He co-founded the establishment of a premier global real estate investment group and later Orbvest. Hennie, welcome and thank you so much for joining us today.
Yeah, thank you, Ronel, for having me, and thank you for the opportunity to share what we believe valuable information with your audience and investors.
Okay, wonderful. Before we get going, I just want to remind the viewers again, please go and subscribe to the channel and go to the link in the description field for our monthly giveaway competition, where you can also win one of my books, Financially Fit and Wealthy. But let's get going about this exciting topic. And Hennie, you should maybe kick off and just tell us a little bit more about Orbvest and what do you do?
Yes, Ronel, I think, if we give one step back, I think we live in a world where there's basically only one certainty, and that is fast and dynamic change. And the question is, how do we deal with investment in an uncertain environment with this dynamic change? So Orbvest's purpose is really to provide, under these circumstances, capital preservation, and then also contribute towards a stable, reliable income for our investors. We also feel very strong about the fact that under these circumstances, diversification is a very important investment strategy. Not only diversification in terms of your own country, but also across the world into stable markets and into stable currencies. And that is what Orbvest is all about: stable, reliable income plus capital appreciation in hard currency in a stable, reliable industry. And that's why we've got a hyper focus on healthcare. Healthcare is a very resilient industry over many, many years. Since World War II, we've seen steady growth and growth in expenditure and treatment. And that demand is on the increase, and I think will never change.
No, I totally agree with you. But I think in terms of COVID, we have seen a big impact worldwide. How would you say in terms of post-COVID? I know you focus on the healthcare industry, which was obviously not really impacted by COVID. But if people ask you, is investing in property still a good investment? What would your answer be?
Yes, I think the first fact, Ronel, that we must all realize is the world has reset. There's new standards, and we need to take cognizance of these changes because it will impact the property industry. The industry will not be isolated and will for sure be affected by the new standards that we see in the world. So certain properties will be affected more, and like commercial offices and maybe retail to a certain extent. But therefore we believe that the healthcare industry is a very, very prominent investment opportunity for investors. As I've indicated, it showed resilience throughout the COVID and post-COVID period. We've got more than 35 buildings already under management in the US. We've had less than 5% tenants that asked for rent abatements. The net operating income per square feet of, and that is in general over the US in general, is up. The prices per square feet of medical buildings is up. So to summarize, I think one needs to be careful. Property will always be a good industry, but there will be changes. And one of the areas that I think will really come out of this very strong is the healthcare industry.
No, absolutely. And I think that is definitely something that we should consider. But if you think about physical property investments, property unit trusts, investing in property shares in South Africa, how would your investment opportunities in terms of global real estate opportunities differ from these kind of traditional investment opportunities that we have in South Africa?
Yeah, Ronel, I think it's exactly the same as you would buy an asset or a property in South Africa. Our focus is investment in direct property through a listed entity, or what we call a diversified portfolio, which consists of 8 to 10 buildings to spread the risk a little bit. But it's exactly the same. We follow the same processes. The only difference is cross-border. It is, international investment. And, you need to then externalize your money to invest in these properties. But you invest in a listed structure. That listed structure has got a cell. Each property or group of properties are ring-fenced in that cell. And that cell is then the direct holder of the shares in that specific, building or group of buildings. Okay.
And then the pros and the cons of this investment.
Yeah, I think from the pro side, I think, the important part, which a lot of people really appreciate, is the fact that I've got a direct shareholding in an asset. I know the asset, I know the tenants, I know the terms, and in our particular case with healthcare, it's very stable. You know the lease terms, you know your income is secured for 5 or 10 or 15 years. The other important factor is we offer a geared investment, and with low interest rates at the moment, I think that really contribute to a better return on your equity. And the investors must realize that you don't sign, there's no downside for you. In our deals, we get a local partner, and they, what we call as a sponsor, and they sign for the debts. You get the benefit of a gear investment without any liability or recourse in terms of that. Furthermore, I think it is a hard currency in a very stable market, and I think that is from our side what we offer. On the downside, I think we must be honest that liquidity is not as good as if you invest in a unit trust or a fund in South Africa, or for that matter overseas. But our investment terms is 3 to 5 years, and it has happened that people need their money during the investment period. So from Allbest side, we keen to buy those shares, or there's a secondary market developed. We offer it to the other investors, other shareholders in the same investment. And in all the cases, people are very keen to buy those shares, because if you've got an asset that's performing and, that people trust, there's many takers for those shares. Mm-hmm. So on the downside, liquidity, and the other area that we really try to improve is, initially it was, we purchased 1 or 2 or 3 buildings. And if you lose a tenant in that building, maybe it affects your dividends, because we need to replace that tenant. And especially with COVID, that took a little bit longer. but in future we will offer an investment opportunity that's spread through a fund or through a REIT. We're still working on that, and that should be finalized within the next couple of months. So if you prefer, then you can also have invest in a range of assets to spread your risk further.
And then you have mentioned now some of the risks, but maybe you can just elaborate a bit more on what are the risks involved and how do you mitigate those risks?
Yes, there's a couple of risks, in an uncertain world. I think the one is is a hike in the interest rate, which means you'll get investment or the interest will cost you more. We mitigate that by fixing the interest rates for 3 up to 5 years. So I think we've dealt with that to a large extent. There's a possibility that you could lose a tenant. I just want to remind all of us that all of our buildings are multi-tenanted, and if a particular tenant occupies more than 30% of the building, it must be an investment grade company, or we must be happy from our investment committee side that this is a very stable country with multiple facilities and multiple, represented in multiple states. So we try to mitigate that risk. Further, I think, we have indicated the very stable nature of the healthcare industry. And we must remember that, our tenants, which is all doctors and service providers in the healthcare industry, their payment and their income is guaranteed because it's all covered by health insurance. So that means, you very seldom get people that goes out of business because, their income is secured through their insurance. So they must just run or play within the rules. And then obviously, lastly, a risk is, as I've indicated, we lose a tenant, but all our buildings got long-term leases, more than 5 years, some 10 years, some of them even average lease terms of 17 years. So we regard that as a very small risk that, we can lose our tenants, definitely not in the investment period. So that I would say is sort of the biggest risks that we face, risk in interest rates, losing of a tenant, and, maybe there's mergers and acquisitions sometimes, but we make provisions for that. And, in the US, if you've got a lease and you want out of the lease, you will have to pay, the landlord the outstanding money in terms of your lease for the rest of the term of the lease. So that I would say is a risk. So low risk, and that's why we think of our investments as really core and very stable with stable income.
And then this investment would be more suited for your medium to long-term period. Is that correct? Yes,
yeah. So it's 3 to 5 years. So I think we all regard that as a medium-term investment. We've got opportunities where people can, where we are prepared to commit to 10-year, but that's more for our institutional investors and family offices. Sometimes I prefer going long term, but for the normal retail investor, we believe 5 year is a medium term. They always got the opportunity to extend the lease, because in a particular building, the group of investors can decide to keep the building and not sell it or roll it over. And there are tax benefits in the US. If you reinvest immediately, you don't pay any capital gains taxes.
Okay. And then your types of returns. I know returns can never really be guaranteed, but what type of returns can the investors expect and when?
Yeah, as I've indicated initially, Ronel, our main objective is to give stable, reliable dividends on a quarterly basis. And we've got three products. The one is the core product, the core asset. There, investors can invest, it can expect a cash-on-cash return, which will be paid out quarterly as a cash payout, as a dividend payout of between 5 and 6%. On top of that, you get your capital appreciation. Our leases increase. Sometimes we've got a little bit of a vacancy. We try to buy a building with maybe 95% or 85% occupied. We lease it up, and then, the escalation and the lease up then result in a capital appreciation. There we try as a total return. That means your dividend that we pay out on a quarterly basis plus your capital appreciation should be in the order of 9% plus. That's for your core. That means a cash income of 5 to 6% plus a capital, growth or total return. We call it the internal rate of return of 9% plus. The second product is our core plus. There we take a little bit of higher risk, but still very low. There we offer a 7 to 8% cash on cash return. So that means if you invest $100,000, you will get then 7 to 8% paid out quarterly, and your total return in that case would be in the region of 13% plus. All of that in dollar terms. After tax, the only tax that you need to pay in South Africa, or if you're, from the destination you invest, there could be a dividend tax. And then we've got the value add product, which we don't offer at the moment. We're still working on that. That would offer a 8% plus cash on cash return and a total return of 13% plus. So that is sort of to give investors an indication, or the audience an indication of the returns that we offer.
Mm. Okay, and then now you mentioned that your investment is in US dollars. Now, then you obviously need to take into account the weakening and the strengthening of the rand as well, where if the rand weakens, you will obviously benefit, but if it strengthens, then you might struggle a bit with your returns. Maybe you must just take us through that as well.
Yeah, I think from a South African perspective, the risk is, Ronel, that, the rand can strengthen, which means you will get less dollars for your investment. I think that's definitely possible over the short term. But I think if we look at the structural problems South Africa is struggling with at the moment, if you think of inflation in South Africa versus the US, I think I've got no doubt in my mind that over the long term, the rand will definitely weaken, which will be to your benefit. And I just want to emphasize that the returns I've indicated doesn't take into account any weakening of the rand against the dollar. The returns I've indicated is dollar returns. So yes, there is a currency risk, but long term, given the fundamentals, I think the rand will weaken against, the hard currencies, and especially the US dollar.
Okay. And then what about the exchange control regulations? I know there's constant debate about it and proposed changes. So what is happening with that?
Yeah, I think at the moment there are three ways that you can externalize some of your capital. I think that is also one of the things that we feel very strong about. That given the circumstances, it's important to externalize some of your capital. There are three ways that South Africans can do it at the moment. The one is the normal allowance for travel, and I think currently you can take about R1 million. Give or take out in terms of your travel allowance, R1 million. Then there's normal allowance that you can take about, I think, 10 million per family member per annum and externalize that. And then thirdly, it is a foreign direct investment, which is a much more structured thing. You need to apply, go through an authorized dealer and get approval from the Reserve Bank. But this is in terms of our investment, it's your responsibility to externalize your capital, take it out, apply for the necessary approvals, which we can assist you with. That means that your taxes must be up to date, etc. There's a couple of conditions that you need to comply with. Then your money is outside, and then from there you can invest. So it's a legal process, and it's done on a daily basis by many South Africans.
Mm. And then in terms of the costs involved, what would that include?
Yes, a very good question, Ronel. I think we must remember this is a direct property investment. So if we've got a team, an acquisition team that's situated in the US, so we have got a very detailed investment strategy and investment criteria. So we look for buildings that comply with our criteria, and then we do a very, very thorough evaluation and due diligence on those opportunities. So we find them, and then we analyze it, from bottom up, financials, technical. There's 140 points due diligence process that we go through. So to get back to your question, what is the cost? For us to enable us to do a proper investigation and make sure there's no downside in this particular building, we ask the investors a finalization and fee for doing the due diligence, for the legal costs, for the attorneys to do the transfer, to set up the structure on the stock exchange. So that is about a 3% of the equity that the investor invests. Secondly, which is very important and which I believe also differentiate us, is we align our interests with the investor's interest. And from a principal perspective, we believe that if we don't work this investment, if we don't offer a return, which is in the guidelines that we've given, we are not entitled to any further fees. But if the property perform, and we've got in all these cases then a hurdle rate or a waterfall. So let's take the core plus. If we offer you, if we did the investment, deliver a return of more than 7%, we share in the upside. So the first 7% goes to the investor, and the balance we share there. So if we've got a good investment that's performing, we get in terms of a fee of a remuneration, a waterfall agreement where we share in the profit after the waterfall or the hurdle rate has been achieved or reached.
Mm-hmm. So the costs that of the returns that you've mentioned earlier, would those returns be net of fees or gross of fees?
Net of fees.
Net of fees. Okay, that's excellent. And I think that's also something that's very important for people to know, because quite often people don't compare apples to apples when they just hear the return, but quite often it's gross.
Again,
what about the tax implications? You've mentioned now that you are holding a share and that you obviously there's a dividend tax implication, but yeah, maybe you can just elaborate a bit more on the possible tax implications.
Yeah, maybe we can just talk briefly about the structure, because that's got implications in terms of the taxes. It's a normal structure that you would do in any country. We've got a company in America that owns the property, and the shares of that company is owned by the listed entity on the stock exchange. So to answer your question in terms of taxes, that company pays the normal company taxes that's applicable in terms of the property and the investment. Then we repatriate the dividends, the profit, to the listed entity in the Seychelles, and that's part of our IP. We do that not as income, but as a dividend. So the investor would receive a dividend, and depending on whether a South African resident and taxpayer, he will pay, if he want to repatriate the money to South Africa back, he would pay normal dividend tax. Or if that money, the source of the money is from an outside structure, then he would pay the dividend taxes applicable to that structure. So if he's got a trust in Seychelles or some of the British Islands, then he would pay the dividend tax applicable in that destination, in that country. So the short answer is the returns that we've quoted is after tax, But the cash-on-cash return is a dividend, and you will have to pay the dividend tax on that income.
Okay, and would there be any capital gains tax involved?
Not. That's also been taken care of. Is paid by the entity there, so there's no capital gain. Unless we sell the building, you keep the money there, and we don't reinvest in a similar asset, then there may be some capital gains tax. But there's a specific ruling in the American tax law. So if you sell a property and you invest, I think it's 3 or 6 months into another similar asset, there's no capital.
Once again, I just want to emphasize to the viewers that, remember, we are just giving through some education. So each one of you have a different situation when it comes to your taxes. So always go to your tax consultant or your accountant and confirm with them what exactly will be the tax impact for your personal circumstances. And then, Hennie, for people who are interested and who might take up these investments, what is the minimum investment requirement in terms of amount?
Yeah, I think, Ronel, we really try to make international property investment possible for the normal retail investor, what we call a man in the street that would like to externalize and invest in property overseas. So the minimum investment currently is about $5,000 US dollars that people need to invest, and then obviously there is no upside to it, but the minimum is there's no maximum, but the minimum is $5,000 US dollars.
Okay. And then obviously also I think there's a lot of people starting to look at moving some of their investments globally, starting to want more global exposure. But for somebody who want to start out now and say, okay, this is definitely something I want to consider, where do they start?
Yeah, I think that's an important question. I think what I would recommend that people go to our OrbVest website. There you can get a lot of further information about our history, our track record, our structures, our governance. You know, they can see the board members, the board committee members, and that will, there's a lot of information there. If they then would like to continue, there's also information about the investments we've made. As I've indicated, we've got more than 30 buildings in the US already, and I think we are concluding a couple of deals, so we would be on 35 shortly. They can also look at those opportunities and what is the quality of the investments we've made. The second step would then be to register on our investment platform, and there we will take you then through the KYC and all the regulatory requirements. There's also on our website assistance from consultants and staff that can help them through the registration process. Once they've been registered and all the FICA requirements has been complied with, and it's not a long process, it's a very simple platform that you can register on. Then you can transfer your money into your wallet on the stock exchange. I just want to emphasize our sponsoring broker is PKF, a very prominent and big auditing firm globally, and they run then your trust money that's in your account. Then from time to time, we will then publish opportunities that people, there will be information memorandums or prospectus explaining a specific investment opportunity. You can then read through that, you can ask your questions, and if you're happy, then you can, once the deal has been concluded and the investment available, you can then transfer your money from your wallet into the investment opportunity. All done by our sponsoring brokers, PKF, in this particular case.
Okay. No, thank you. So I'm definitely going to share the OrbVest website details if you want to get in touch and want to get more information. But Hennie, you've provided now a lot of information, and I think it is very important for people who are considering these investments to really, understand it better and to be well educated about it before they start with this journey. But I do believe there's so much potential in it, and I typically or I definitely like what you said in terms of investing in the healthcare industry. It definitely lowers your risk so much. But because I think what we've seen now, a lot happening, especially during this lockdown period, there are a lot of scams out there. And people trying to, invest with some kind of broker, put their money overseas, and the next minute the money is gone, and the broker is gone, and everybody is just disappeared. How can people who want to invest globally in real estate, how can they make sure that they deal with a reputable and legitimate company?
Yes, Ronel, I think a very important question to all our potential investors. I think firstly, we are a listed entity, and I think, a listed environment, there's a lot of regulations and compliance that you need to go through. Every transaction that we put on the platform must be approved by our sponsoring broker and the stock exchange in particular. So there's a lot of regulation in terms of feedback. Secondly, in terms of South Africa, we are a Category 2 license holder, so we comply with all of that. And I just want to mention briefly that we've got investors now out of 32 countries that invested with us. In some countries, substantial amounts of money, and we also need to comply with all the collective investment scheme and advisory regulations in those countries. So it took us about 5 years to get through all of this, and to do this, allow people to invest in a legal and compliant way. So that's important. And then lastly, I think, that they can look at who's the people involved. We've got really international independent board members with, reputation. We've got board committees consisting of high-profile people, all helping to make sure that we don't take unnecessary risks and that we do everything in a compliant way. And lastly, that, the investors are protected all along the way. So that, I think, from a legitimate point of view, that, this is what we've done, and this is how we run our business.
Mm. No, and I think that definitely gives a lot of comfort to any investor, because I really do believe that quite a lot of investors are a bit skeptical and scared at the moment because what we have seen happening recently. So thank you for confirming that. But Hennie, I really want to thank you for spending some time with us today. Thank you for sharing valuable information. I definitely believe going global is something that has to be part of any investment portfolio. But again, the more you educate yourself about the opportunities, the more you know about it, the better you know which questions to ask, the better you know how to manage your risks around any kind of investment. So thank you for sharing with us more about global real estate investments. And I am going to share your details for the viewers to go and have a look at the website for more information. And then I also want to just tell you again, remember to subscribe to the channel and go and click on the link in the description to enter the competition where you can win one of my books, Financially Fit and Wealthy. Thank you so much for watching, and we will see you again at the next Ronel Talks Money show.